Hi, this is Manesh Patel with Valetax. I'm the market strategist here. Today's presentation workshop we're going to begin with is going to be Ichimoku Kinko Kaya. If you've never heard of it, you're in for a very special treat. This is my expertise, and this is what I love to do. Um, I've been doing technical analysis for many years, and this is the foundation for my trade. And I'll explain why in a couple of minutes. Why I chose Ichimoku versus moving averages versus Bollinger Bands and various other technical indicators out there. Okay. As you can see, I've written a book here from Wiley Publishing, the top publisher in the world here. So you could see it there. You don't need to buy it at all. If you click on that barcode, it'll allow you to get into our Telegram chat room. That's where I'll send you the free ebook that we have that we created for Valetax. That will be in the chat room there. So we're gonna send you a free ebook. It details everything about Ichimoku, its strategies, everything in there, and we'll put that into the Telegram chat room so that everyone will have access to it. Again, to get into our Telegram chat room, there is the barcode there. So Ichimoku Kinko Hayo is a Japanese trading system. We'll go for the history and everything in just a moment. But it is something that was created in 1929 that still exists today and is very powerful. I'm one of the leading experts on Ichimoku worldwide, both the retail perspective and institutional. So a lot of institutions use Ichimoku worldwide. A lot of the banks do to manage money and so forth. There's many different aspects of Ichimoku. This is going to be the first of a couple of workshops we're going to have on Ichimoku. Reason why is I want to step you through all the aspects of the system. That way you can see the advantages, disadvantages, and so forth. Today, we're going to cover the cloud trading, and you'll see what that means in a minute. So Ichimoku is called clouds, cloud trading. There's many different names and so forth out there. If you go to the internet, you'll find tons of videos, tons of articles, and so much stuff out there. There's a lot of misinformation on Ichimoku too. A lot of people claim they have the books, the original books from Goshi Osada, and they know the hidden secret behind Ichimoku and all this stuff. There's no hidden secret at all, and I could tell you that now. So let's begin the presentation and step through everything as we go forward. If you guys have any questions, you're more than welcome to ask those questions, either unmute or just ask in the chat room. Okay. I believe in one thing, the KISS method, keep it simple, superhero. You have to understand when you're trading probabilities. The only way you're going to trade probabilities is to keep things simple. That means you got to be able to analyze a chart within 3 seconds and be able to determine the settlement for it and if there's an opportunity. If you can't do that more in 3 seconds and it takes you a lot longer, the longer you look at a chart, the higher the probability you're going to have to fail. So the whole idea of Ichimoku is at one glance. So if we translate the Japanese meaning in Ichimoku, it means at one glance. So the whole premise of this system is to keep it simple, go in, be able to analyze something, and get out very fast. And that was the purpose of the system in its originality. Okay. So it does go down the KISS method of keeping it things simple. Okay. So if you look at the journey of most technical traders, they go through in their lifetime. And this is something I went through too. First thing most traders do is they start to learn price action. What is a bar? The OHLC data. They'll learn what candlesticks are. Some will go down the patterns of candlestick patterns and stuff like that. They'll learn what pivots are. So they'll learn to trade with pure price action. Then what happens is majority of people go to moving averages. They'll look at the 10-day moving average, 30, 50, or 200. Those are the common ones. Most people venture down to moving average scenario. Once they add moving averages, they may win, they may start to lose. And then what happens is you start adding other indicators on top of moving average. because it's a lagging indicator. So people add RSI, they'll add MACD, they'll start looking at divergence, various different things. So most people start with moving averages, but sooner or later they'll start adding other indicators to complement the moving average system. Then what happens is most people will start to go into chart patterns. So they'll start looking at double tops, triple tops, various different chart patterns out there, divergence and stuff like that. Once they go through that, then most people they see the chart patterns, they'll go into Fibonacci. When we did a workshop Fibonacci, so you could see how easy that is. But most people that really get into technical analysis goes down the Fibonacci route. After Fibonacci, if you want to optimize it, you go to Elliott wave, which is basically Fibonacci optimized. Okay. And then the last method they come into is Ichimoku. And this here encompasses everything that you've gone through in your technical career and simplifies things and really gives you a idea on how to trade both the retail perspective and the professional way. Okay. And this is typically the journey most people go through. Some people will just stop with moving averages and just sit there and trade with just moving averages. But if you really go down the technical route, this is the next you go, and you pretty much come to Ichimoku, and that's it. It'll give you everything that you need plus more. Okay. And today we're going to discuss Ichimoku, one aspect of it. Okay. And the goal for you and everyone always should be the only way you're going to become a consistent, profitable trader is to make sure you look at your reward risk. It's not the winning percentage at all. And you saw that from one of the workshops that we did at my manager, how you could lose 70% of the time, win 30% of the time, and still cannot break even a little profitable. So the key is the reward risk. You got to have a reward risk at 3 to 1 or higher in order for you to be consistently profitable. And that is the key in nature of the game. So no matter what we do from any technical perspective, whether we look at Fibonacci, Elliott wave, moving averages, Ichimoku, or anything, we always want to build a technical system on top of our money management foundation, which is looking for 3 to 1 reward risk ratio. Okay. So that is our goal always, and that has to be our foundation in order for us to be consistently profitable. So let's go through Ichimoku. Ichimoku was basically developed back in 1929 from Goshi Osada. This is a picture we found of him there. He developed this. And remember, back then there's computers, there's no internet, nothing at all. So literally, he drew each bar one at a time and would put it on the wall. And he did with the daily part addings there. And so it was very tedious for him to do that for various different instruments out there. But he accomplished something that was very, very powerful. And one of the key aspects of Ichimoku is that it not only does it talk about price, but it also talks about time. Okay. And that is a very critical aspect of the indicator. Everyone talks about price, but timing really matters. And that's what Ichimoku gives you is the timing element. So if you've never talked about timing in trading, you're going to get a really good exposure of timing when you start dealing with Ichimoku. And the most interesting thing was back in 1929, Goshi Osada back in Japan created his system. Another trader in the US called W.D. Gann created another system. Both of them talk about price and time in 1929. And believe it or not, they were the most successful traders of all time. And both of them came up with almost the same philosophies in a different way back in 1929 that still exist today and are still very powerful today. Okay. So after Goshi Osada, then we had another gentleman here who worked for Nikkei Citigroup Securities here. He took Ichimoku to another level and started publicizing and making people more aware of it, so forth. And today, if you look at it, most people use a Japanese trader system out there, and they use Japanese candlesticks. They use Ichimoku. There's also Renko and Kaji charts too. So A lot of trading philosophies, believe it or not, are origin of Japan because of everything we did and how powerful the systems were. So that is the history of the Ichimoku. So before we go into the system, why Ichimoku? Why not Elite Wave? Why not Fibonacci? Why not another system? Why did I choose to go down Ichimoku after learning everything out there? And these are the reasons why. And I wanted to explain them from a high level. One, it's simple. It's visual. Now, trading is a visual system. Okay. You have to be able to look at a chart, be able to see things and filter out the noise and see if there's an opportunity there. And that's what Ichimoku allows you to do. It's a visual system and it's simple. Second, you're able to determine the sentiment in 1 second. And what do I mean? Half the time when we look at a chart, the magical question we always ask is it bullish? Is it bearish? Is it consolidation? And that's the question, the very first question you should be asking. Once you know what the sentiment is, then you could determine is there an opportunity or not. Okay. So the two questions I always ask when I'm asked about an instant is what is a sentiment? That's the question I answer in my mind. And then two, is there an opportunity, trading opportunity there? Yes or no? Those are two magical questions that you always formulate in your mind when you look at a particular instant time frame and to determine whether to put money behind it or not. And to answer those questions, we could go through a nightmare. We could analyze a chart over and over and over, complicate things in various different things. But Ichinoku eliminates all that to a point you know within 1 second what the sentiment's going to be. And you'll see that in just a moment. Money management, as we talk about, the goal is 3 to 1. Our goal is to get in at the beginning of a trend, not halfway, not later at all. And that's what Ichimoku allows you to do. It's not a lagging indicator like the moving averages at all, where you have to wait for a bar to close. It's it's non-lagging, so it's very, very powerful. And we'll go for that formula in just a moment. Okay. Next, its ability to be optimized. So we're going to go with one aspect of Ichimoku today to start getting you trading with Ichimoku and thinking the correct way. And it has other elements built in the system that allow you to optimize, take all the subjectivity that you have out of the picture completely. The next one, very, very powerful, which most people don't realize. It's called multiple time frame analysis. Most people look at one time frame. Okay. However, there's 3 time zones now that everyone has to understand and look at. And the reason why is trading has moved into a robotic world. Okay. So there's machines now that are daily trading that influence the lower time frames. Then there's some at the high, middle, and lower. So if you look at trading in general, there's 3 zones. There's a day trading zone, a swing trading zone, and a long-term zone. So these are the 3 different philosophies that you have. And when you put on a trade, you want to make sure that you're trading in the direction of all the 3 zones. So you have to be able to do multiple time frame analysis, which easily you could do in with Ichimoku. And I'll show you that. And the most powerful thing is a multiple time frame support where the day traders, swing traders, and the long-term supports are all the same level. So you know it has a high probability to hold. So we will go through and go and show you how to find each multiple time frame support just like that. It's not going to be detailed. It's not going to be hard, which most people make it to be. We're going to show you exactly how to do that. Next is you have a very simple trading plan. Remember, the goal is to create simple habits that you could implement that turn into you trading probabilities. And that's what we're looking to do. Forecasting. It could forecast the beginning of a trend, whether it be bullish or bearish. It could forecast it going into consolidation pattern. Okay. And this one here is very critical. A lot of people think that Ichimoku only works for certain time frames, certain instruments. It's completely wrong. It works for currencies, crypto, uh, futures, stocks, anything. If you could chart it, you could trade it with each unit. That's basically the philosophy. And we talked about lastly, it'll help you find the key support resistance levels, which are very critical for you to trade. Okay. So these are the reasons why Ichimoku is powerful from my perspective. And this is why it is the foundation for my trading and my success. This is the reason why I was able to move from the retail world to the institutional world to manage money and so forth. Okay. So let's step backwards and look what trading is about. If you think about what the purpose of an indicator is, an indicator's sole purpose is to find key support resistance levels. When you find it, the goal is to trade around it. The closer your entry is to that support resistance level, the lower the risk. So that is the sole job of an indicator. Doesn't matter if it's moving averages, doesn't matter if it's Bollinger Bands, pivots, Fibonacci, any of those things. It does not matter. The sole purpose is to find these support resistance levels and then putting on orders as close as possible to that support resistance level. Okay. And we talked about this already. I know most people use moving averages. I'm not a fan of them at all. And the reason why it's moving averages is based on closing price of a bar. And in order for things to happen, you have to wait for the bar to close. And with this world of volatility, you can have a lot of volatility there. And if you have to wait for it to close, you're going to miss a lot of the reward. And that's one of the reasons why I do not like moving averages at all. I know most people use moving average 50-day, 200, 10, 30, but I'm not a fan of moving averages, and I'll explain why in a minute. Okay. As I mentioned, it's lagging with volatility. It does not work at all. Okay. And you can see it gives up a lot of rewards. So these are all the things I mentioned just a minute ago. And you can see why moving averages, I'm not a favor at all. The solution, in order for you to not have a lagging indicator, your indicator cannot be based on closing price at all. It has to be based on the high and low of the bar. And if you base your indicator formula off the high and low of the bar, now you don't have a lagging indicator and you know that you're going to catch the correct trend with the correct momentum. Okay. So if you look at Ichimoku, it's not based on closing price at all. It's based on the highs and lows. And what it does is this is almost like a form of Fibonacci. Okay. So if you take the 50% value of Fibonacci, that's kind of what the formula here does. And this is with a Fibonacci built into Ichimoku. But basically the formula here is that you take the high for X number of bars, let's say 26 bars, for example. If you take the high for 26 bars and then you take the low to 26 bars, that gives you the range for the high, the range for 26 bars. So then what you do is you take that level and divide by 2, take that midpoint, and that is the formula for Ichimoku. So it takes the high and low for X bars and then divides by 2 to give you the average. And that is the Ichimoku formula. So basically, it's the 50% a Fibonacci level of a range. Okay. And that's what you're getting here. Okay. So that is the formula. And if you look at the elements of Ichimoku, there's typically some people say there's 4 elements, some people that say it's 5. So if you look at here, this is what you have. You have all these different elements in here. In today's workshop, we're going to discuss the cloud. We're not going to discuss the Tinkinson or the Cajun set. But you're going to see these lines, and they give you the average. So the cloud is made up of 2 indicators. The first indicator gives you the average for 18 periods. The second indicator of the cloud gives you the average for 52 bars. So that tells you the range for 52 bars. And that is a very, very powerful support resistance when you see that. Then you have the Tinkinson that gives you the range for 9 periods. And then you have the Cajunson, which is 26 periods. Okay. And this is called a continuum with trend. which we'll definitely get into on the second workshop. Okay. So now let's begin the journey of understanding Ichimoku. Our goal is to go through, teach you the strategy, teach you how to use this, and then we're going to go to some live charts right now. You could tell me what you want to look at, what time frame, and we could analyze them together. Okay. So the cloud strategy. Okay. So if you look at Ichimoku, this is the cloud here. Okay. And if you look here, it's made of two components. So the current bar is here. And the interesting part of Ichimoku is that this cloud here is shown in the future. Normally, you see the current bar and all the indicators are below it there, and you never see anything to the right of the current bar. And that's not true in Ichimoku at all. So what they've done is here's the current bar, and then have this cloud that's projected 26 bars into the future. So you see this cloud here, it could be of different form and stuff like that. If you look at the far right, the top of this cloud, which is gray here, that represents the support resistance for 18 bars. This black line here represents support resistance for 52 bars. So the current values, support resistance, are shown 26 bars into the future. So if you look at this cloud here and look below it on the current bar, these values here, this black line here is the average 52 bars, but it was 26 bars ago. So let me explain this to you. And let's keep it simple. The past influences the current bar. So normally you look backwards and you look at find support resistance levels. And the hardest thing is that when you look back, how far do you go back to find support resistance levels? That's always the magical question. And you could scroll back 10 bars, you could scroll back 20 bars. And if you ask every trader, they're going to say different things. And that is subjective. In order for you to trade, you can't trade with probabilities with subjectivity at all. So that needs to be removed. So Goshiosar was so brilliant that what he did was he took the past right here. And remember, the future values here, current values are here. He shifted this whole cloud here. So when you look at price here, you're looking at everything from 26 bars ago. So you're looking at the support resistance levels for 26 bars ago. So you no longer have to look backwards at all for support resistance levels. You no longer have to figure out how far back to go, what to look at, or anything at all. All you have to do is look above you or below you on the current bar, and you could see exactly everything there. The support resistance levels, what the sentiment is, everything. So here, if that's very powerful. Does anyone have any questions on why this cloud was shifted 26 bars into the future? So the current values here right there. And when you look at this cloud above you, below you, that shows you the support resistances from 26 bars ago. So the key is, where is price in respect to where it was 26 bars ago? Okay. And the answer, the key here is that this is the cloud here, right there. And if you look here, there's the current price, there's over here. If you look above you or below you, you could see the cloud. We could see this current bar here is above the cloud. That means the sentiment is bullish. So the way it works is if the current bar is above the cloud, you're bullish. If the current bar is below the cloud, you're bearish. If the current bar is in the cloud, you consolidate. You do nothing at all. And when you look at this cloud, all you do is wait above you or below you, not in the future at all. So everything that's happening today is controlling the future. Everything that's happening right now, right here, when you look at it below the cloud, it's telling you how you are today compared to what it was in the past 26 bars ago. So that literally is the meaning of everything, why the cloud is shifted and so forth. But in theory, you don't need to know all that information at all. Just understand one thing. If this bar, look above you, below you, if this bar here is above the cloud, the sentiment's bullish. That's it. You don't need to know the formula at all. Okay. If I don't care if it's a bullish bar, bearish bar at all. If the closing price is above the cloud, the sentiment is bullish. Okay. If the current closing price here in this example is below the cloud, the sentiment is bearish. If it doesn't matter if it's a bullish bar, bearish bar, just look at the closing price. If it's below the cloud, it is bearish. Okay. If the closing price is in the cloud, that means it's consolidated. There's no sentiment at all, bullish or bearish at all. Okay. And that's it. It's as simple as that. So you should be able to go to a chart, look at the current bar, look above you, below you, see where the cloud is, and instantly in 1 second, you should be able to determine what the sentiment is. And that's it. So you stick to that sentiment and then you've traded in that direction of that sentiment. So there's no more guessing, no more you're drawing lines, doing this, looking back at the past, nothing at all. It automatically tells you what the sentiment is within 1 second. Short and simple. Okay. So now, does anyone have any questions in regards to the cloud? No? Okay. So now I'm going to give you the worst case strategy. What did I say? Worst. Okay. Most people go up, do presentations, and they sit there and give you this glorious strategy and stuff like that. Then when you go to trading charts, you don't sit there and get into that glorious strategy. You hit these worst case scenarios and you really don't know what to do. So I'm going to give you the worst case strategies. And then what we're going to do is talk about how to improve that worst case. So you should be able to look at the system. And if you take the trades, even in this worst case scenario, you'll see that you're still going to be profitable. And that's the key. Can you be profitable in the worst case scenario? If you can, it only gets better if you optimize. And that is the goal and philosophy that we have. Okay. So if you look here, right here, our prerequisite here, okay, our prerequisite is that we're looking for price to be in the cloud at least 2 bars. Okay. Our goal is reward rates. Get the highest reward rates. Okay. To do that, you want to get it at the beginning of the trend, not the middle, not the end at all. If the trend starts, you really don't know how far it's going to go. Most people say we do. No, you can't control this market at all, and you have to understand that. All you could do is put your orders out there, get into it, manage a trade, and let the market go. If there's $10 on the table, you're going to get the $10 or $8 or so forth. You can't get 20 at all. So no one could really predict how far this thing's going to go at all. Okay. So the goal is to get in at the beginning of the trend. That way you're not getting in the middle of the end where you're capped with reward risk and you're not going to get good at all. So our goal always is get in at the beginning of a bullish trend or bearish trend. That is our goal. That basically is based on our money manager, which is getting 3-to-1. Okay. So we're looking for 2 bars, at least the closing price to be in the cloud. Once you have that, now we could trade on either bullish or bearish. Okay. So once you have the 2 bars in the cloud, then we're looking for it to break above the cloud or below the cloud. And whichever way it breaks, that's what we're going to enter. Okay. Once we enter, the stop is always going to be wherever that bar we're trading, the high or low of that bar at the point of entry. And our target's going to be 3-to-1. So this is our worst case trading strategy out there. Okay. So let's look at some examples and then we're going to go to some live charts. Oh, I forgot. Let's look at money manager. Our goal is to enter trade. When we enter trade at the end of that bar, we want to be profitable to stay in. If we're not profitable, we're going to exit that trade completely. The second bar, we want it to be more profitable. So when that bar ends, we want it to be more profitable. If we're not more profitable, we're going to exit that trade. And then on the third bar, we're going to go to break even and take the risk out completely. Okay. And then you can see here, there's many different options for trailing stops. You could use a trailing stop that you like. You could use the previous bar, or there's an indicator on the Ichimoku chart called the cadence. And it basically is support resistance for 26 bars. And remember earlier, I told you it's container of the trend. You could use that line with a buffer for your trailing stop. Reason why is as long as it holds that cadence in level, it is going to keep on trending. And we'll show you that when we get to a live chart. Okay. So here's example of a trade here. Okay. So here you could see that we're consolidating closing prices in here. Here, price basically broke above the cloud here. If you entered here, you probably would get out here because your entry would be a couple of points. Sorry. Your entry would be the black line here, couple of points there. You entered there. You're profitable. You stay in that trade. Second bar, you weren't profitable. So you got stopped out here. Okay. So you got stopped out there. Now price basically is in the cloud here. 1, 2. Now it broke above it here. This time you didn't enter the trade here. And at the end of that bar, you're profitable. You stay in this trade. Second bar, more profitable. You stay in this trade. On the third bar, you go to break even. And now you let this thing ride. Okay. And you could see it keeps on going here. So you could stay in this trade as long as price is above the cloud. That is the worst case scenario, or you could use trailing stops. If you stay in this trade until price it closes inside the cloud where it changes state, you're still in this trade here. So this is a long-term trade here on a daily time frame here, and you could see that you're just going forward with this. And remember, you're at break even by this bar here, so you've got nothing to lose at all. And then what you could do is when you get to 3-1 reward risk ratio, you could take 50 to 75% of your positions off, and then the rest ride with a trailing stop or until you close inside the cloud. Here, you broke in the cloud, but you didn't close in the cloud at all. So you still stay in this trade here, and this is still a trade that keeps on going. Okay. But remember, initially you got stopped out here and then your trade came in. So the goal is in this worst case, there are going to be some false breaks, which you're going to pretty much get into and you will have to take a loss in them. But when the winners come, they'll be big that to a point they take care of you losing trades. Okay. There's another trade here. This one broke out of the cloud here. You enter here. You stay in this trade because it's profitable. This trade here was just a little more profitable than before of the closing price here. So you stay in this trade. You go to break even here. And you're still in this trade here. And then over here, you would get out when it closed in the cloud. Remember, this is the worst case here. No trailing stops, nothing. But over here, you've got the 3-to-1 reward risk ratio. So you should have taken some profits and stuff like that there. Okay. Here, another trade here. This is Bitcoin on a weekly. You could see here, you got in here. It went bullish here. Profitable, we stay in this trade. More profitable, stay in this trade. And now you keep on going all the way up. And if you're looking for the price to be in the cloud, it's not. So you're still riding this going up here completely. Remember I was telling you the second method is that you use the cadencing, the support resistance for it. This green line is the cadencing here. And one way you can maximize profits is that you stay in this trade until you close below the cadencing. And this is the place right there where you close below it. So you would exit out with profits there. And then you could look to go back in later on, either on this time frame or later. Okay. So you could use the green line as your trailing stop because it's the container of the trend, or you could just stay in this trade until you close in the cloud. These are options that you have that are available for you. Here is pound Switzy here. You could see you had a couple of bars in the cloud here. You broke out, you entered the trade here. This is profitable, more profitable, go to break even. And now you'd stay in this trade as long as it stays above the cloud here. And you could see here, it's closed in the cloud here. So you would take profits there. You would not re-enter here because you never had two bars in the cloud at all. So this went up and then consolidated. There's one big mess here. Here you could see you would enter the trade here, profitable, more profitable. Then on this bar here, you went to break even and you got stopped out of break even. So you're gonna have a couple of hiccups here and there, okay, going forward. And we'll show you how to optimize these scenarios a little later, but I wanted to give you the worst case scenario, but there'll be a scenario here once we add the optimization that you would not try to enter here at all. Okay. But remember, I wanted you to get the worst case scenario so you could see that you can make money in that scenario. Okay. Here's another trade here. It's the exotic pair here. You entered here right there. It was profitable. So expand a trade. Second trade more profitable. You go to break even now, which is up here, and you're still in this trade come down. Okay. Uh, I'm showing you various different time frames here. This is New Zealand yen, the USD. You could see here, it touched it here and then broke out here. So one other way you could optimize bits. And remember, when you optimize trades, the goal is to get higher quality trades. But remember, trading is just like life, yin and yang. If you start optimizing, you're going to get less trades, but they're higher quality. Okay. And also you'll miss some other trades that are going that doesn't fit your profile. So you got to be willing to do that. So one method you could do is that instead of always entering as soon as it breaks the cloud, like here, here, and here, what you want to do is wait for it to touch the cloud and hold the cloud here. So you could see it broke below it, hold it here. And then what you do is on the next bar below that low, you enter. So here, you never did that at all. Here, you tested the cloud here, but you held it. So now what you do is you do a breakout order here. So a lot of the cloud breakouts, the way you could optimize it is that you want to make sure you test it here and hold it, and then you place the order below it here. So in this scenario here, you never would have entered here at all and take a loss. You would wait for that bar to finish and then put a breakout order here, which never got filled. Over here, if you didn't do that method, you may have entered depending on a buffer. But if you wait, tested it here, and then go on a break right there, now you got into this trade right there. So that's one optimization method, is that instead of just taking a trade that breaks out of the cloud, you want to make sure in the previous bar, you tested that cloud and you held it, and then you look for the break. Okay. But again, you're going to miss some opportunities, especially volatility ones that just go without testing this cloud completely. You got to be willing to do that, but this is a great optimization method out there. Okay. So now let's go and look at some charts. Okay. So let me share my chart. Here, 1 second. Okay. Should be able to see my chart now. So let's go through and look at some things. So any particular instrument you like to look at? No, not at all. So here's crude oil. Let's look at crude oil. Okay. And here's crude oil here. So if you look at crude oil on a weekly time frame, long term, you could see here, you test this top of the cloud here. And then this week right here where it gapped up, you're looking to sit there and enter so as a broke buy. You could see here with the gap, it kind of killed it, but you had an opportunity here to enter here if this had opened up nicely. And long term, you could see crude oil go up. If you look at it from a other perspective here, on a daily perspective here, this is what it looks like here. So here you would have entered here above there. So this is properly staying trade. Over here, you get out with a little loss here. Okay. And this is where it still went up, but you did not participate due to your money management rules. Okay. So these are things we'll talk about how to optimize a little bit later, but there's not an opportunity there at all. Okay. If you look on a 4 hour here, now you had an opportunity here. So when you look at these opportunities, it tells you what time frame is really controlling this instant. So you could see here, you have price here, 1 bar in this cloud here. And you really need 2 bars in the cloud here. So you can't really trade this one at all. Okay. So if I go to a 2 hour here, right there, you could see here, there's no opportunity here. If you got on the break here, this tested it here right there, and then you could look to enter here. If you did, you entered there, and you got out of break even. So crude oil here did not fit the criteria here for any of those time frames here at all. But if you come in here, now you go to a 1 hour, and you could see here on a 1 hour, this bar was in the cloud, that's in the cloud. So over here, you entered there, profitable, break even, and you could see here, you could have gotten in this or not. Okay. So with the rules I'm giving you, you're going up and down, and there's some opportunities that you could enter, some you don't in here. If you want to look at this on a lower time frame and look at it on a 30-minute, you could go to the 30-minute here, and you could see the opportunities here too. Okay. And so, and the way you want to always look at it is you want to trade in the direction of the higher time frame. Okay. So if you set up it here on the weekly is bullish, then what you want to do is look for breaks of the cloud bullish on lower time frames. And that's the way you always want to play it here. So if you could come in here and draw a line here, right about right here, this is when it went bullish right there. So this is when you, on the lower time frames, you start looking for opportunities that are above the cloud and so forth. So that's how you want to trade this. So crude oil is not the best example right now due to the gap. Let's look at Bitcoin right now, and we could see how it's doing here. And you could see here, the opportunity for Bitcoin was right here. This is where you tested this here on January 19th. And then what you're looking to do is enter. So as it breaks that low here. So right here, January 26th, you would entered Bitcoin going down. And you could see now that basically this is bearish long term until you close back inside that cloud. And that's not going to be for a while at all. So this could be bearish trending or bearish consolidation. It could be various different things, but long term, this is bearish here. If you go to a 4 hour here, you could see the fluctuations that are going on here. So every time it goes bullish, it really doesn't go that far at all because the weekly is basically bearish. You could look at bearish opportunities here. Here you had testing of the cloud here, really didn't break. It broke it here. And so you would have entered, maybe, no, you wouldn't have entered as a buffer here would covered you. So you never entered here. This went down already, you were entering at all. So if you keep on looking for bearish trades in here, you're going to find some opportunities in there depending on the time frame. But right now, if you look at it here, it is still bearish on the weekly. And you could see on the daily here, the sentiment's bearish too. And so really long term right now, Bitcoin's still bearish on both the daily and weekly, completely going forward. US 30, we talked about this yesterday in Valetax. If you look at the weekly time frame here, this is bullish here. when it's got above the cloud right there, you could see it tested it here and you would enter here. So you entered here. This would be bullish and still bullish until it basically closes inside that cloud. So this is still going forward being bullish. Okay. Uh, let's look at gold. So you could see gold here. You could see the movement here. This is really, really bullish here. Let's look at the daily. The daily now shows you the fluctuations that are going on here. And you could see it came into the cloud here. It's consolidating, tested the cloud here. We would have entered right there. You basically was profitable. You stayed in trade. Here you were profitable. Now you got to break even. And then you're still in this trade here until you closed in the cloud here. At that point, you got out. And now basically in here, it never tested the cloud here. So you would not enter. So you're basically consolidating here. If this gets above this cloud here, watch out because you could come and retest this high here. And that's what we're looking at right now. Because if you notice, we did not go bearish at all. So there's still bullish sentiment here because it had a chance to go bearish, did not do it at all. And now it's possibly going to try to get above this cloud sooner or later. And notice one thing, the longer it consolidates, that top of that cloud is coming down. So it's getting higher probability the more it consolidates that it could go bullish. So this is something that you definitely want to watch because if it gets any buying power here, gold could come back and start to go bullish long term. Okay. Any instruments you guys want to look at? Maybe some currencies or something? This was one yesterday. And actually, I think we did EuroCAD yesterday. This is a bearish trade that we showed yesterday on Dial Talk. And you could see here, it's in the cloud. So that means it's consolidating now inside this cloud. So long term, this is not a good trade at all. So if you're taking any trades, as you saw that I took a bearish trade this week, the goal is that I will exit that trade by Friday. Reason why is the weekly time frame is in the cloud. That means anything can happen. If you look at the daily time frame here, you could see the bearish here. You could see you tested the cloud here, basically entered here profitable, over here profitable. You had break even. You got stopped out at break even. There's another way you could enter here. But either way, this is going down here slowly with time. But you could see the sentiment here is bearish here. And that's the reason why here we went into the cloud here completely. So if you're trading something bullish, you're day trading or swing trading, you want to be above the cloud of both the daily and weekly in order for everything to sync. If you have a discrepancy like here, this was bullish, and then you could see here, we went below the cloud here, right here, this went bearish. So now the daily is starting to influence the weekly, and that's the conflict you're going to get. So if you take a trade off the daily, then you know that this is going bearish here. But you have to be cautious now because you're in the cloud. So the best trades are when you're above the cloud on a daily and weekly for bullish, and the best trades for bearish is when you're below the cloud for the daily and weekly. And this is one thing we do on the US side, because if you look at the E-mini and all that, if you look at all the products, you could get distorted with US indexes and futures. So one of the things we do is that we look to see which stocks are below the daily and weekly cloud, and that really tells us that these stocks are bearish or these stocks are bullish. And you monitor that every week, you can kind of get a feel of what the markets really are doing. So you could even do that with the dollar products like the pound USD, euro USD, and so forth, and get a good feel. So is there any other questions right now? Okay. So this concludes the first workshop. Okay. And our goal is to give you a taste of Ichimoku in its worst case scenario, which is the clouds. So as soon as you're above the cloud, it's bullish. As soon as you're below the cloud, it's bearish. And your goal is to enter as soon as it breaks the cloud. That is where basically the beginning of the trend is. Okay. We gave you that worst case scenario. We also showed you some money management, some entry techniques. There's various different things. Now, what you can do is if you have an existing system, you could overlay this with it. Okay. So what you could do is as soon as it breaks the cloud, you could look at your existing system to enter or not, or vice versa. So you could mix and match various different things with your existing system, or you could look at Ichimoku by itself. So there's many different things that you can do and so forth. But as I mentioned, this is the barcode here for the Telegram chat room. Join the Telegram chat room. Everyone's welcome. Please pass it around to. We'll post the recording in that chat room, along with any other things that we're doing, any other workshops and stuff like that. Also, you're more than welcome to ask any question you have about any chart and instrument for Ichimoku or even any of its technical system out there. We're there to help you out all the time. So, if you have any questions, just ask us. That's it. Thank you for everyone's time that attended. I look forward to answering your questions in the chat room. Thank you.